Bitcoin is at a very critical point that may ultimately result in a dramatic $10,000 move in either direction. This goes on to prove why technical analysis is so powerful, for whatever move Bitcoin settles on will be there to exploit it in full. Much of Bitcoin's destiny depends on what will happen in the immediate future. It is clearly trying to settle on a direction amidst all of the contradicting signs. But we don't need to know which way it's going, for we'll profit from it either way. All we need to know is where the critical breakout points are located. The rest we leave to the odds bent in our favor. I have recently set up an account to be able to do leveraged Bitcoin trades. This is something we'll discuss in more detail in future episodes, but for now, whatever side of the fence Bitcoin falls to in the short run, I'll be just as happy. But first, nothing in this episode is financial advice. Everything I say is for entertainment and educational purposes only. And if you like what I do, and if this episode helps bring clarity to the rapidly changing technical climate of Bitcoin, then please return the favor of hitting the like and subscribe buttons, and share this channel with others who may benefit from hearing this too. Let's now learn everything we need to know about that dramatic $10,000 immediate future of Bitcoin. Starting off on the 4-hour chart, for a short-term helicopter perspective, Bitcoin is trading right at the gray support zone. This has been a strong zone throughout and has so far solely acted as support. For as we can see, whenever Bitcoin has tested it from below, it has offered no resistance whatsoever apart from on one single occasion. Instead, it has rather nonchalantly walked right past it as if it were nothing. Upon each time that Bitcoin has tested it as support, it has only managed to break below and close below it a mere 3 times. This test right here, however, is no less than the 11th time that Bitcoin finds support on this very zone. This on its own is quite remarkable and goes on to prove how key this area really is. But as we can also see, whenever Bitcoin has broken below it, it has moved fast. The first time, the break below opened up the dam and plunged Bitcoin into a minor abyss, during which it lost 19% in just half a day, at which it later bottomed out at a minus 22% loss. The second time around, it immediately found support at the zone right below for a quick yet non-convincing reversal. For as we can see, Bitcoin barely managed to stay range-bound before dropping once again. And upon the third break, it just proved how much weakness that was contained in the price action, as the price plunged straight down to this support zone without even bothering to pause in this zone on the way. And the practical reason for this is because there were a lot of buyers at this very level. For each of these 11 tests go on to show the predominant buying pressure in play. In this sense, if Bitcoin were to break below this key level of support, it could very well be the discouragement needed for the buyers to give up on their longs and hence add to that selling pressure. A break below this zone could therefore be the catalyst needed to plunge Bitcoin down towards that $42,000 to $45,000 range that we've been talking about a lot. On Wednesday, Bitcoin made a rather nasty fake out. In fact, I watched it in real time as it broke up and then witnessed how it turned right back just as quickly. The trading volumes weren't convincing, so this could have been a lone attempt at pumping the price, at which the market collective stepped in and took it back down again. To add fire to the fuel, Bitcoin is currently stuck between a hard place and a rock, as it's now trading within the red Ichimoku resistance, whilst at the same time performing some sort of a balancing act right at the EMA ribbons. As of producing this, Bitcoin has already spiked below the ribbons and is currently trading right within them. And these ribbons are in turn in the midst of swapping from bearish to bullish, as the shorter averages, as in the lighter colors, are getting on top. Bitcoin is still trading near the resistance of our tentative descending channel, and as we discussed in the previous episode, a third test of its bottom would perfectly align with our prospect $42,000 to $45,000 range. If Bitcoin manages to protect this support zone, it could be enough to kill the final short-term bears. In such case, we may likely have a reversed head and shoulders in the making, one with a technical target of $63,500. And do bear in mind that technical targets are rarely final targets, they're just the first high likelihood pit stop for the price. So based on the 4-hour chart, this is a highly critical spot for Bitcoin, and whatever direction it ultimately settles upon can move the price by up to $10,000 either way, for there is a lot of built up pressure right here. Moving on to the 1-hour chart, Bitcoin is trading right within this notorious support zone of ours. It has also broken below not only the green Ichimoku support, but also the EMA ribbons, which offer good overall reliability on that time frame. It has just tested them from below as resistance, upon which they got rejected, and what particularly adds to the very short-term bearishness is the predominant sell of volumes. This one in particular is a bearish clue of more downside to come, as it was the key candle to get rejected by the ribbons. All in all, my conclusion is that if Bitcoin manages to hold up this very strong short to mid-term support level, then a reversed head and shoulder will be in play, of which an outbreak will statistically land us at $63,500. I will position myself up on such an event, at least with a smaller position, as there is still quite a lot of technical resistance until that very level. If on the other hand Bitcoin were to fail this support, then it may, given the many times it has acted as support so far, cause a collective sell-off pressure as the buyers rapidly turn in sentiment. This could be the catalyst for a mini market capitulation move down to the aforementioned $42,000 to $45,000 levels. When it comes to the reversed head and shoulders, the spot I'll be looking at for such outbreak will depend on when it takes place. If it were to happen soon, then I'd look to enter at around $55,600, as it would then both safely exceed the diagonal neckline and give some safety margins from the previous closes and wicks. If however it were to happen later, as in early May, then any break above the neckline would suffice. What I will do then is to set a tight stop loss right below the support box. In such case, I stand to lose only about 2.5% upon a failed outcome, whereas the technical target is at 16.5% for a nice 6-to-1 trade. On the downside, however, any break below 53,000 is enough to warrant a short. And such short will have its stop loss right above the support zone, of course with some minor margins to leave some leeway, and with a technical target at 47,000 initially for a 4-to-1 spot. Upon such trade, I will sell off in increments, and my last target will be a 2-bar trailing stop to give it a fair chance at reaching that $42,000 to $45,000 level. This perfectly goes on to show why we apply technical analysis, for we don't know where the price is going, yet we have properly identified a pivotal level with a high return in relation to risk, regardless of which way it ultimately settles with. As I've recently set up an account to trade Bitcoin with leverage, I would not want to miss out on a downwards move, and equally so I will long an upwards outbreak. Or, as Voltaire himself put it, the best of all possible worlds. That was all for now. Thank you and goodbye.